Good morning, everyone. Today is Tuesday, February 9th, and I'm Michael Boutros, currency strategist, doing my intro for Daily FX. Good to be with you guys here for this intraday strategy webinar on SB Trade Desk. Looking at some interesting price action today. Obviously, I just wanted to bring your attention to gold, which has continued to push higher, but we've been all over this. So let's jump right into the charts. It's great to see you guys here. Eileen, happy Tuesday to you as well. Mario, Graham, Mark, Kyle, Kay's in the house. Gary, great to see you guys. So, um, Graham says, "Good morning, Michael. I think today shows you are definitely living on the wrong side of the ocean, and we even have skiing in parts of Europe." I know, Graham, trust me. Well aware of that. It's either become nocturnal for me or move out there, right? So a lot of the moves that Graham is noting happened overnight. Again, some of the setups that we were looking at yesterday panned overnight. Not so much necessarily in the euro, which is at resistance right now, but sterling, Aussie yen made a nice move. Kind of need to be up at those hours to get some of these moves. But in any event, let's just take a quick look. Relative performance for the dollar heading into the U.S. session looks like this. You have a 1% gain on the Swissy, 1% gain on the yen, euro up 0.38%. Split performance, Aussie biggest loser in the session, down 1.45%. Obviously, the Aussie yen we were looking at yesterday, still the favored move on there. Coming to an area of support, mind you, we'll take a look at that in a moment. Also, aside from that, we want to take a quick look at what's been going on in the broader equity markets. You did see a pretty substantiated sell-off here yesterday. This is what Asia Pac looked like. Chinese markets, for the disclaimer, I think most of you know, but are closed this week for the Lunar New Year. So you're not going to see too much volatility from that sector, but certainly the Nikkei down 5.4% on the session. Hang Seng down 5.1, or excuse me, the Nikkei down 5.51 on the session. So seems like a broad risk sell-off. Looking at the relative performance of equity markets right now, you're seeing the same thing over in Europe, down 2.10% there, 2.1% on CAC 40. DAX down 1.52% in the session, so is the FTSE 100. U.S. equity futures look like this. Also poised to open much lower in the session, about 138 points, 36 points here on the Dow. One thing I did also just want to look up, guys, I was checking this out earlier today, the Fed futures rates. And this is what tells us what the market is pricing in as the probability for the next interest rate move from the Fed. So if you look at this column, this is gauging the percent probability that you'll see a 25 that will be at 25 basis points. Obviously, we're at 0 because we've lifted off from 0. So we're in this range right now between a quarter and 50 basis points. So heading into March, 100% means that 100% is being factored in that we will still be at 25 to 50 basis points in March, which means markets are not pricing in a hike in March. Moving down into April, right? Still only a 2% chance of a hike. Still, the majority of the market participants see it holding steady. You really don't start to get a significant uptick until right here, and that's September, where 14% probability of a 25 basis point hike, which would get us from a quarter to 75. So just to go to show you, I mean, these expectations for higher rates from the Fed are really getting kicked out. More volatility that you see, the more heaviness in risk assets, specifically equity markets globally, I'm sure the more you'll see these get kicked out. So for everyone who's favoring the dollar on the premise that we will get further interest rate hikes in the near term is going to want to rethink that strategy. Certainly the dollar broader price action has been saying the same thing. All right, so quick note of that. As usual, guys, you can take a quick snapshot of any of the charts you see presented here by clicking on that camera button top right-hand corner of your GoToWebinar screen. All right, so let's jump right into the charts. First, let's start off with the US dollar and just kind of show you a quick gauge of where that is. Here's the daily. And again, just highlighting the major area that we've been focused on, the major zone. We highlighted 12,049 on Sunday as the major key support confluence near term. You have that sliding parallel of the same operative slope, caught all those lows from August, October, and here we are in February again. Key resistance near term, 2016 open, 12,131, and the April high day close, which has been a pretty decent pivot in price. And that comes in at 12,123. All right, so we need to see a break out of this range. And when I say break on a daily chart, we're talking about a daily close either above this region. We'd look for a much more substantiated recovery, or a downside break. You're looking for all those targets that we noted on the report. So the 200-day moving average comes in at 12,024. A little bit bigger of a region here. The 50% retracement coincides very nicely with that slope support. So sort of a grand picture of what we're looking for in the immediate term. It's either a break above 12,131 or a break below 12,049, favoring a move lower. All right, so taking a look at sort of what the dollar is doing again can give us really nice prospects on the near term. Here's what the 30-minute dollar chart looks like. And you can see a pretty nice consolidation here. Just a quick note, I think we talked about this yesterday, but I just want to note it. The downside break of a descending formation. You can see that the sternest part of the move was right here. So recovery, former support, now resistance. Let's see if we can hold below that high that we made yesterday. Any questions on the dollar index before we move off? As always, guys, also do keep in mind if you have any questions or specific trade setups you want to review, go ahead and throw them on the message board. All right, so let's just go through this in order. Here's what the setups looked like last night. And we'll go over the update first. So I just wanted to highlight dollar CAD has been in the news. Everyone's looking at it. I think the levels are super clear on dollar CAD in the near term. So I thought it prudent just to bring it to your attention here. Let's bring up the daily chart first. And here's what we were looking at yesterday. So we highlighted this region right here, okay? You're basically looking at that, what is it? 139.54, I believe it is. And basically right there, you're looking at the high day close from last year. It's 139.57, excuse me. So pretty big, pretty important level, right? The close high. You have the yearly open just below 38.11, 38.12. And we're looking for a break of this range right here. If we get the near-term recovery, you'd expect to see this give us a nice clean break higher here and kind of take off, which we didn't get. I noted that in yesterday's piece. We kind of just start to slowly work our way out of that descending channel that's held for a good 3 weeks. So if this was going to be a break of magnitude, let's call it, you'd expect to see a little bit more force on the upside. Obviously, the 2015 high day close sort of stunted that advance right off the bat. We're at the same exact spot. Okay, so haven't taken any positions here. There was opportunity actually for a scalp on this break to the downside. You had that momentum that we highlighted in yesterday's piece or the consolidation rather in momentum. So a downside break there actually did give you a nice short trigger. This is at the start of European trade. So again, Graham, all the setups for you guys, gave you a nice drop, turned right ahead of former channel resistance, now support. And all it did, guys, for all intents and purposes, is just continue to verify and validate our opening range for the week. So the opening range high, I'm going to keep that right alongside that key high day close, 39.56. Support comes right here at 38.40, or the opening range low, but I'm not going to ignore that we have that fib confluence there. So I'm going to open the opening range low for the week down to this region. Okay, so no change to those levels. We're still looking for a validation break. If we do get a topside break, like I said, I'd be just looking to play the recovery. Ultimately, we are looking to get back on the short side for dollar CAD. Okay, it's kind of a thing where you can see sort of a near-term recovery, three-wave up maybe. Then we start to drive down again. If we break back below that 38.11, 38.12 yearly open, we're going to go right back into those subsequent targets, 36.34. 35.40, which is what we were looking at last week, and this is going to be the major support near term. The 618 retracement from that October low, the 100-day moving average, and slope or basic channel support. So it doesn't get much cleaner than this as far as the levels are concerned. We kind of need to get a little bit of push here with momentum. Keep in mind, there's not much event risk on tap here on this pair, so we got to keep that in mind. So from the United States, obviously we don't have anything on tap until pretty much it's going to be the retail sales print is going to be the major release on Friday. And just check the Canada calendar. They're pretty spent on data as well. Okay, any questions on dollar CAD? So hopefully we'll get a move on this. Next one on tap from yesterday was Euro Key. Excuse me. I know that on the swing side, we're long already on that, and certainly that's panning out extremely well. Your stops are at break even at this point or better. But I just wanted to highlight the possibility for an acceleration here if we broke through this. Inevitably, we were looking to buy a pullback, but 69.85, the 618 retracement off the high, was dead on the daily chart with former slope support, now resistance. Again, if you see a break, you'd expect to see a little bit of a run here. On the near-term chart, I was actually working with a little bit different of a structure with this pitchfork off the low, which also had the median line at that 618. So further validation of that being a near-term confluence level. Here's what it looked like last night. Here's what it looks like now. So first, with that daily chart, you can see the obvious clear breach of that level. There's the run. On the near-term chart, there it is. So as we said yesterday, we'd be looking at buy weakness with interim support at 68.97. That's almost exactly where we kind of held that low, 68.97 right here. Okay, we came right into it. We pulled right back. On the 5-minute chart, I'm not sure if there was a trigger on this. Let's check it out. On Euro Key. Oh, I was looking at this earlier today. There is. Here it is. Oh. So it wasn't going to be the most convincing trigger because it's only a 2-point touch, or I guess this was a 3-point touch. More importantly, you had divergence into the lows backed by trigger break. Really nice stop right against the low there as the trigger gave out, and you would have been looking for, again, 72 pips. It's a much, much bigger, wider ATR, guys. So keep in mind if you are trading Euro Key or any of the wider ATR pairs that we will jump into on the scalps, just make sure you're reducing your leverage if you're newer to the strategy and just getting started and you're being a little bit more nimble. But I love it. I still like it to the upside. Looks great. Next scalp target takes you into a basic 50% retracement at 71.69. All those levels are noted for you. No change here. $70.95, 171.69, and 73.10 is going to be this longer dated extension. That's a 1618 right off the low. Let me just zoom that out and show you where it is. Okay, so that's off the December low. That 1618 right here, 73.10. Any questions on Euro Key? Oh, okay. A question here saying, oh, first of all, Premendra, good morning to you. Sorry, I didn't see that. Can you talk more about where to look forward or where to look for a pullback in the 5-minute and entry this morning or later in Euro Key? So here's the 5-minute, right? So again, I'm very nimble, Eileen. I will take counter trend trades throughout the course of the day. Actually, it's sometimes funny because the guys will make fun of me on the desk. I'll make money on a day where the euro is just tumbling on the long side somehow just by playing the rebounds. So I don't want to necessarily encourage you guys to do that unless you're comfortable enough. So to wait for a pullback to get long here, Eileen, it's going to be tough because you've already broken through. Sorry, just give me one sec. Okay. So this is your opening range, right? Objectively, you would want to stay constructive above the median line. So if you get a pullback into this region, momentum holds 40, then you get a topside trigger, that's the ideal scenario, right? But on the 5-minute, let me just take a look for a possible short trigger, which is what I was looking at earlier, okay? There's, just on a 1-minute chart, you trigger off the lows. It broke. Price action didn't give us much of anything. So it wasn't an operative break, but here we are coming back, checking that former support now as resistance. Now you're getting some divergence into those highs. Higher high, higher high, higher high, lower high, lower high. And it's showing you a possibility of some waning momentum. Now on the short side, I would not necessarily be looking to attain a full quarter of the daily ATR because it is counter trend. So do keep that in mind. But might be something worth taking a shot at if we open up the US trade session. Don't necessarily want to fight this. It's a breakout any way you look at it, but that'd be one way of attacking this scalp heading into the US Open. Does it make sense? He says, for the counter trends and no chase. Exactly. So I can't tell you I can't be an advocate of trying to get long from here. If we see some sort of reaction, like I said, up here and a decent trigger break on the downside, might be a nice fade move. But again, inevitably, we would be looking for a pullback to get long. Bullish, invalidation is still going to be right here. And the reason that we highlighted this yesterday is because it's going to be an objective break of the weekly opening range low. So if you're looking to validate a bias, and specifically if the opening range is in place, the most easiest way to invalidate your trade idea is for a break of the weekly opening range. So not only is it this major fib confluence, but it's going to necessitate a break of that weekly low and the lower median line parallel. All right. And in Euro is doing the same thing. Yeah, we'll jump into the Euro in just a sec. Any questions on Euro key? It's actually a good segue, Eileen. Okay, nice wide ATR. If you're a little bit don't want to mess with something quite as big, the euro dollar setup is also extremely clean. We are making it through that 1252, 1263 level, major key resistance. We highlighted this yesterday as well. Here's what euro looked like on yesterday's intraday chart. Okay. So the brief drop that we saw yesterday and rebound off that 1120 level was pretty important and significant. And when you see something like that, it gives you further validation. False break, didn't even spend a couple of hours down there. It was like an hour and a half, and then it just popped right through. So further validates our broader bullish invalidation level was down here. Remember, you have a whole host of things, 618 extension, a former swing high, 1058, and the 200-day moving average, all in this same region. So, topside break from here, which we're getting. Soft targets at 1307. I don't want to stress this level too much. If you are in the trade, it is a level of which I would start to take a little bit off the table. But the major key target to the upside beyond this is going to be up here, 1385 into 1382. Okay, and that's the October high day reversal close at 1385. So, whoops, right here. The October high day, but it was also an outside reversal day. Close of that session offered clear resistance, and the last time we tagged it, here it is again. So point being, guys, if we close above this region today, we're going to continue favoring buying scalps while above the initial opening range high for the week, looking for that stretch into 1385. And then 1442 ends up being the May high day close. Goes back a little bit further. So pretty clean. Even the Euro's got the ATR starting to wide out a little bit. 28 pips is a nice little setup there. So targets are pretty clear. Looking to stay constructive while above 1256 or 1252, 1263 if we close above there today. Bullish invalidation, still got to keep it at 112.20. We'll raise that to 112.20 from that 110.58 level. So let's look at this, Eileen, on the 5-minute chart as well. Wrong charts. Oh, I was just messing around with this earlier. I thought I was going to get the break, but played it too early. In any event, for the short side, one trigger I'd look at. And this actually Looks like you're getting some momentum waning here. Remember, these divergences in above 70 or below 30, very weak signals. The closer the divergent signals or the divergent points are to 50, actually the stronger the signal is. So just here at 1292. We'll be looking for this. Again, on a near-term prospect, on a break to the downside, if you get a decent trigger, it might be a nice fade scalp. Long story short, we need to close above this region today to continue favoring the long side. Really big level for the euro here. Where is your 110.45 extension fib on that 30-minute on the euro dollar? This one? Sure, let's take a look. That dates back to just the lows that we made this year. Right from 110.45. Excuse me, right from 12.3. December 3rd is the low. Sorry, I said something that sounded like "Hey Siri" and my phone started talking to me. But Eileen, do you get that? So the low that you made right there on the 6th, or on the 3rd rather, the subsequent high that you made on the 15th, and the subsequent low that you made this year. 618, you can see the hundreds right there, and that's sort of the level we were looking at. This also coincides, guys, with the near-term chart. Besides those two fibs, 100 and a 764, basic upper median line parallel, which is why this is so paramount here. And if we get back below here in U.S. trade, for me, that actually might be a decent signal to fade that move. But I'm not going to try to fight this breakout at this point. Eileen says, again, why do you pick those points? So, Eileen, easiest way to look at this. You're always going to look for the extremes, right? So we're looking to define the nature of the advance. So what's the first leg up? I think you would agree this is the first leg up, right? Lowest low, and that's the highest high. Again, the extreme from here, that's the lowest low point. I mean, for a level like this, there's really no other setups that would work for an extension. Maybe you could do something like this, but you're taking really near term. This is the broader extension I would be looking at for sure. This is the low, the record low, or the near term extreme. Here's the near term extreme high, subsequent, and then subsequent to this, the lowest point is right here. And in time from December to just after 2016 open, right? Yeah, don't stress time so much with fibs. It's just a pure explanation of price action. That's it. Are we on the same page? I keep wanting to see the fib closer, closer in time in the time lows. I keep wanting to set the fib too close in time lows. Yeah, I see what you're saying. Always take the broader view, guys, and that's why I really don't like to use the word scalping very much, 'cause it has a very bad aura with it, right? Because that's people tend to do that. They start doing their analysis on a 5-minute chart or a 10-minute chart, and it's so micro that you have no clue or reference to where you are in the broader trade of trend. And that's just, that just ends up being a chasing game. So definitely always take a broader view, take a step back and see what the market on whole is doing, what key levels we should be looking at. It's the same extension you have here, Eileen, on the daily chart, okay? And if you ever get confused, what I wanted to show you is bring it into sort of a line chart. Sometimes will be cleaner and easier. First, there's a big wave, there's a next wave. Looking for those topside targets on the basis of this launch. Okay. Okay, the broader view, I keep forgetting to look out more. Absolutely paramount, specifically near-term trade strategies. And just from being on the desk for so many years, I can tell you that that's probably the major problem with people who try to do near-term scalping or near-term trading in general, is they have no frame of reference of where we are in trend. Okay, so the other setup, that was on euro dollar. The other setup from yesterday I was looking at was sterling. Here's what it looked like yesterday. Again, a pair we're looking to find some support to buy into, but as long as you're staying within the confines of this descending channel formation, you got to respect the near-term trend. Here's what sterling looks like today. Okay, so here's the daily chart real quick first. So yesterday, after we saw that decline build off of Thursday's tag last week, and then slam off that major key resistance level, 146.50, 146.88. We talked about that. 2015 low day close. This is the 50% of just the decline off the December high. And then you have also the 1618 extension off the low. So big region of resistance, the pullback, key support. 143.73. You're looking at a basic 50% retracement of that advance. And also those median lines off the high. You have the actual median line, and then you have a sliding parallel off the lows from September. And that's exactly where we based yesterday. So this is the barrier of entry to resume the short side of the trade. If we break the lows of the week, you'd look to continue favoring the short side selling rallies. We're not doing that yet. We're sort of leveling off here right at the 50% retracement. There's that descending channel. I don't know. What do you call that, guys? Right? Nothing. False break scenario, I don't know. We're basically holding the range that we started Europe with. So you're sitting at support. Give you more conviction if you see a break here in US trade on either side. Okay, if you break through the 44.80 level, I'd be looking to buy pullbacks for resumption all the way back towards the median line. If it breaks this low, or specifically the opening range low, you'd look for continuation of the broader downtrend. I think things could get pretty messy if that happens. So another trade, I put it on the radar yesterday just because I haven't had any positions on this. And there wasn't many triggers heading into last night's Asia Pac session. Was watching this, but there's nothing happening in price. So we'll look for more clarity on this. You're at support near term at that 43.20, 43.75, 43.73 level here. And the focus range is going to be 43.73 into that 44.80 region. So we're looking for a break of this key region. Keep in mind, this sliding parallel is the same slope. Seems to be catching these lows here. Questions on sterling? And again, a quick reminder, if you checked out or if you've been keeping along with the swing side of trades, the analog with the late 1990s that Jamie points out with the sterling does suggest that you see a little bit of a congestion region here, back and forth, back and fill, whatever you want to call it, before we finally make the next break. So any positions that you take here, you don't want to start taking on a longer term, right? Nimble is the name of the game. And that is the sterling. Hey, Gary says, hey, Mike, would you also take a look at gold right at trendline resistance going back to 2014? Let's take a look. Take a quick jump. So I think I know what you're talking about. I know some people are using this trend line, right? Yeah, and you could see resistance just a little bit higher. He says more like March of 2014. Yeah, the March highs. Yep, I can see where you're looking at. Here's the thing with gold. If you're long, are you long, Gary? If you're long, I would have this as an initial target because that 618 of the entire decline off the highs that you made from January, this is of last year, should be a nice sweet region. You've seen some nice pivots there as well. And that trend line, more or less, will coincide there over the next couple of days. The other thing, and we pointed this out yesterday on Daily FX in the webinar, how many times we've seen gold really rally this many days in a row. Now we've completed 7 full days, consecutive days. The last time we saw something of that magnitude was right here. Okay, Sorry guys, my little lag here. You saw a 3-day correction. If you go back even further to here, you saw another 3-day correction. And even the one before that, I think we were looking at this yesterday, was a little bit more significant of a correction to the downside, but you saw a good week to the downside before it recovered. So I'm a little bit cautious here of, possible exhaustion of the primary rally that we're seeing. Beautiful breakout though, beautiful breakout. And remember, Gary, a break of an ascending formation to the top side, typically the strongest part of the move. Just like a break of the descending channel to the downside, similarly, will give us that type of magnitude move. So he says nervously long. Well, Gary, you're in the right position, my man. I'd be looking again, like I said, if we can get as close as you can to that 1207 level near term, maybe take something off. I definitely think if you're in the money, you want to bring your stops in, but it's a constructive trade. I mean, if you're in from anything sub 1136, I'd look to add to that maybe on a decent pullback. You know, this was huge for me last week. Okay, the median line off the lows, the current operative resistance, or the upper median line parallel of the advance that we were in for the last month there. Basic trend line resistance off the May high. I mean, you name it, it was over there. I even think, is there a 764 somewhere in there? Yep. You even have the 764 retracement. All right. So, long story short, this is going to be my near-term bullish invalidation level. So even if you get a decent correction here, a pullback to the downside, specifically the dollar sees some strength, you know, I still would trade would still remain constructive as long as we stay above that confluence support there. Gary, does that help out? And one other thing I'd note, remember, when momentum is in overbought conditions, that's not when you want to fight it. That's when the market has the most strength behind the move. So if anything, momentum is in your favor. If we break back below 70, that's where you start to get a little hairy. You're likely to see a little bit more of a exodus of the position that could, you know, sort of cause a cascade effect for a little bit of a pullback here. But I think this shuts up all those gold bears that we were catching all that heat for into the close of the year. Looking at crude, now that we're looking at the commodity block, just a quick look at what we're doing on that side. Here's what it looks like. And again, a little bit of a different story. Yesterday, we snuck right below this trend line, basic trend line support, basic channel support. And we closed right above it. Today, again, pressing those lows. So the low day close for the year is 28.26. It's the low that we made here on the 20th. And a 2618 off that first leg off the October high takes into 26.50. Downside targets are clean. Your bearish invalidation level at this point is going to remain with that median line. So that basically takes into like 32 still, 32.30 today. So tight range here. Don't have much of a strategy trading U.S. crude, at least at this point, but good reference, specifically for the loonie too. Gary says, it does. I must love a thrill ride. My usual pairs are the Abomination and Gold. Been bitten many times over the last year. But you've been beating them up this year, though. Great. Awesome. I always like to hear the underdog story, specifically on the end, Gary. So I'm going to be on your side every time. She's a wicked one. Let's just take a quick peek. There was a lot of moves in the end pairs actually yesterday. This is as ugly as it gets for me, and I hate it. So this is what it looks like for dollar yen. You were sitting on a support barrier, or you broke a support barrier yesterday, and that was this range right here, 116.46, excuse me, to 116.60. Yesterday we popped higher, failed, and then closed well below that region. So, I mean, this is a daily chart, guys. I really don't have anything on tap near term until 14, essentially, 13.97. And that's just a basic 236 of the entire ascent off the 2011 low. A basic 236. This is like a five-year fib retracement, 1397. Add to that near term, looks like you have a nice confluence there with that lower median line parallel. And again, we'll highlight this break here is pretty big. You got the median line off the highs and that sliding parallel off the high from August. So looking lower, sub 116.40, 116.60. As long as you hold below this, you continue to look lower, looking for that tag of 1397 for initial support. All right. Kyle said, I had to step away. Did I miss Euro? You did, Kyle. If we have enough time at the end, I'll just give you a quick skim through, but let me just get through these. So we did Euro Kiwi, we did Euro Dollar, we did Sterling, we did Dollar CAD. The other only one we didn't cover from last night on the radar chart was Aussie Yen and CAD Yen, both of which, CAD Yen specifically was a beautiful play. I'm kicking myself right now, but here's what Aussie Yen looked like yesterday. And we were noting near-term confluence support right here at that 80-90 region, basically right at 81, just below 81. Here's what the Aussie Yen looks like on the daily. Gary says, very nervously short dollar yen by accident, really 6 days down. Surely a rebound towards the end of the week. Be careful saying those things, surely. Remember, volatility and the opening range strategy dictates that heading into the close of the weeks, volatility will pick up. And if the opening range is viable for that week, it'll close at the extreme, meaning you tend to see the low, if the market is an uptrend, early in the week, and the high late in the week. A lot of times you do get that spike high into Friday or Thursday and you pull back, Gary, but be careful with setting too firm an expectation just based on the fact that we've continued to break down. But that's awesome that you caught that that you caught that dollar yen drop off. But Aussie yen, so that was a key near-term support confluence, 81.90. There is the break, and it just plummeted ever since. Now we're checking longer-term 50% retracement. That's at 80.16. Here's what the scalp looked like last night. And here's what we were looking at. Okay, so that confluence support right there broke. You'd have attained the 46 pips. Either way, you did see a momentum trigger break to the upside. That failed. And then on a 5-minute chart, there was a clean trigger to the downside again. So on a trade like this, again, if I was in Europe, I would be a lot happier. Here's what Aussie Yen looks like on the 5-minute. Real clean triggers. That was a divergence into a trigger break to the upside. Wouldn't have even gotten near 50 pips, but then when we saw the opening range break for New York, would have sort of solidified the deal there. So at this point, whoops, looks like we actually might have a long position to offer here. Hold on. The low is right at the 80 handle. You're at 80.27, 46 pips ATR. That might be a decent trade. Some divergence here, one below the extreme, one above the extreme. Near-term divergence. On a trigger break here, if we do take the long, guys, remember, initial target would be right back at former support, 80.90, resistance. I do want to also bring your attention to one thing. Former trendline support or former channel support right there at that 80.90 level. So any long side exposure, that's where you start to clean up your book. Again, keep it nimble. We're trading counter trend. You don't want to get too excited on a move like that, but definitely a viable move from here. Eileen says, in Aussie dollar, Aussie yen, would you have taken the long just at New York Open, 30 minutes RSI turning from 30? But would that have been more of a gamble than a clean trigger view? I'm not sure I understand your question here. Turning from 30. On just, let me take this again, Eileen. On just the fact that we saw a bounce on 30 here, no. Yeah, sometimes, I mean, I hear what you're saying. She's saying, is it going to be just a gamble if you take it based on the turn? Yeah, because you don't really have that trigger break. And remember, if we wait for the trigger on the 30-minute, you're going to miss a lot of the move, which is the whole purpose of getting triggers on the near-term chart like here, is because it's more recent price action. This doesn't even peg until that candle closes, right? So I'd be looking at 5-minute triggers for the actual sort of trigger to jump into the trade. We definitely want to watch the 30-minute because that gives us a little bit more validation of medium-term trend, which direction. But for the immediate scalp, yeah, drill down to a 5 or even a 1-minute. I bet you the 1-minute would have given us the signal here earlier. Well, you got that divergence. Yeah, you could have stretched a trigger there. Wouldn't have been the cleanest, but on trades that have a little bit more of a wider ATR, jumping to the 5 typically would be good enough. Even in the 5-minute RSI, though, we didn't trigger until we went above 40. Yeah, that's right. Eileen, am I missing something? You're right. Because that's where the actual trigger resistance was. I mean, we could have, again, guys, this is just reference. There's nothing magical about what we're doing here, and there's nothing too technical about this. And I don't want you guys to stress this too much. Price action is the only thing that talks. It's the only thing that matters. We're just looking for this to help us give an indication of when momentum is waning. So, Eileen, to answer your question bluntly, as soon as I saw divergence here, price is at a support, major support, and I get a trigger that looks like, it's right on tap, yeah, I'll jump in sometimes before the trigger just because I know that you're at a big support level. You have divergence on the 30, you have divergence on the 5, and there's a trigger break, right? So on a trade like that, yeah, sometimes you can front run it a little bit. Again, I don't want to encourage that too often, but to get the better entry at support, you're seeing multiple divergences on multiple time frames, go for it. Yeah, I wouldn't say don't worry. So Eileen says support, divergence, and then don't worry about the 30 versus the 40 RSI. I'd say once you're in the position, I still want to see those things, right? So I wouldn't say don't worry about it, but you don't wait for it. Is different. Is a different type of, I guess, the way we should say it. Because on a 30-minute chart, that RSI is not going to peg until the half hour is closed. So you can see a lot happen in a half hour. Does that help, Eileen? Does that make sense? She says, yes, better. Don't wait. All right. Cheers on that. Okay. So Aussie yen, any questions from here, guys? If you're holding the long that we just took, then look for that rally towards 80, 89. Again, former channel support also coincides in that region. And in fact, just a quick, for reference, a basic 236 would take you into 81.50, which is our soft target, 81.46. Okay, so first target 80.90, 81.48, 81.50 would be the next target, and near-term bearish invalidation level. Looks pretty good. Yes, makes better sense. Thanks. You're more than welcome. All right. Last but not least from last night's update is I do want to take a quick note at CAD Yen. I know it's a weird pair. Again, a decent ATR at 41 pips. I kind of just threw this structure on it last night and looked pretty clean. In fact, the region that we rebounded for the opening range high for the week at 84.58 was ideal. Clean upper median line parallel and exact 1618 extension from that first leg down. And then even when you broke below the median line, look at this. Back and forth, back and forth. So we were looking for a drop into key support, which is right at the 82 handle. It's exactly what this thing did, and then it kind of just sat there. And that's exactly what it did. We're holding that same range. So the pitchfork is getting kind of messy here because lower median line parallel, we're going in and out, but the levels remain pretty clear. Okay, you got to beat that support at 82 to get the broader continuation, and you'd be looking lower at that point. Whoops. Towards subsequent downside targets at 80, 87. That's a 764 of the entire move off the low. So again, actually a pair that will tend to move very nicely with in the environment that we're in, because not only are you seeing a lot of risk off, but you're seeing that weakness in crude, CAD weakness, yen strength. That's the kind of thing I was thinking about. So barrier of entry again is 82 as support. Watch that. A rally towards 83.50 might offer a better opportunity to try to get on the short side. But as long as we hold this formation, as long as we hold below that median line, I'd be wary of any long exposure here. And again, a real strong risk-off environment will favor this to the downside for sure. So let's bring that down to here. And we'll bring this down to that same support barrier. Okay. All right, so those are all the pairs that I have. Feel free if there are any questions or trade setups that you guys want to look at. If I missed anything, Gary, gold, I think we talked about it. Did we talk about gold? Here's what gold's doing. We did. About how many consecutive days? Yeah, so you have a lot of consecutive days of advances. Again, just a quick recap. Watch that resistance confluence. Kyle, for you on the euro, real quick recap there against where we are. Looks like this. Pretty clean. It looks like a break above 1250, 1263. We have to see today close above this. I can't stress that enough, guys. It's a really big region, not only because of the fib confluence, but because of the also the operative trend or median line formation we've been in is right there. Okay, so if we close above this region, first target 1307, we're just shy of that now. Subsequent target 1382, 1383, and that coincides with the high day reversal, outside reversal day of October. Aussie dollar on a reversal or just a pullback here? Let's take a quick look. Aussie. Yeah, I've kind of been, kind of like Aussie hangover. So you guys remember how we were covering Aussie all over the place last week and the week before, specifically last week on the start of February with the RBA interest rate decision right to open up the week. We were all about it. Most of the Aussie trades I've taken over the last 3 weeks have actually been by way of Euro Aus, which we can take a quick look as well, Eileen here. But for the Aussie dollar, just rebounded off the 618 retracement, 69.85. So the immediate focus would be lower below this here right now. If it breaks through, you're right back into the US, into the broader weekly opening range. Look for resistance alongside that median line or channel support. Quick retracement in such a scenario would give you targets at 70, 75, and that 50 at 71. But base case scenario, you find some resistance here heading into US trade. Says it's running, really kicking myself for taking the trade-off early. I always recommend guys to scale out. It's one of my favorite things to do, specifically in these markets where everything is sort of range bound, but you get these intra-week breaks, like we did in Euro Dollar today, like we're looking at with Euro Key. It always is prudent just to leave a little bit on the table. Oh, I see the resistance area now. 2, thanks, and yes, I do need to scale more. It's a big part, guys. Scaling in and out of positions is very, very beneficial for you because you leave some skin in the game if you get those extended breaks. And secondly, once you've brought your stop to break even and you've locked in a portion of the gains, then you're trading with the house's money, and that's going to be my favorite thing to do, right? Mario says, can you comment on Euro Oz now that the weekly opening range has been broken to the upside? Yeah, I like it. If you're not already, like I said, if you're not already in the position, I would look for a pullback here. Actually, might be interested, like I said, just to have for a scalp as a near-term short. We can get a nice trigger on the upside heading to the U.S. Open against that high. Might be a decent play for just a quick retracement. But you are checking resistance as we speak at that confluence region, September high day close, the upper median line parallel. Both are right here. On your scales, do you wait to take off the quarter of the ATR to move the stop to break even? Not always. So Eileen was asking, when you scale out of a chart, do I wait 70 pips if I'm long here to take out a quarter of the trade and break it even? Not always. Ideally, absolutely. Ideally, absolutely. If I'm looking for a 70 pip ATR, you can bet your bottom dollar at any trade. I don't care how strong it is. For me, I'll do something. Take something off, bring stops to break even. We have to stay disciplined. Okay. On a trade where I'm trading counter trend, I'll be a lot more willing to take it or take a portion off the trade, Eileen, ahead of the scheduled ATR amount, right? Because I'm trading against the trend, don't want to get greedy. And sometimes there's no, if the trend is a strong uptrend, you're probably not going to get a full extension 70 pips against resistance unless it's actually reversing. So when we're trading counter trend, not always. When we're trading with the trend, I try to make it a rule of thumb, yeah, to wait for the quarter of ATR. And still moving the stop to break even would make sense. Right. Stops at break even for me is something I do pretty quick, especially when I'm in a very heavy levered position. P.S. I should have scaled when I closed my gold 5 days ago, says Mario. Your gold long? Yeah. So it's something we don't talk about enough here, guys, and I think is not discussed widely enough in general, is position sizing in trading is paramount. Is paramount. Now, the one thing I do want to take a caveat, guys, and tell you, before you start doing that on too many of your trades, there is a risk when you start to take profits too quick and bring your stops to break even. And that risk is this. Over time, if I'm taking profits ahead of my quarterly ATR, bringing the stop to break even, and it keeps stopping at break even, you think no harm, no foul, right? But over time, any trades that you take that get stopped out on the full allotted amount, right, your risk to reward ends up being negative. So just as a caveat there, you always want to try to stay as prudent as possible, but um, stick to the discipline and keep your, what's the word I want to use? Stay disciplined. The best way I can put it. All right, Eileen, does that help? Can you start again about the break even and why it doesn't work over time? It doesn't work out over time because when you take the stop, Eileen, if you take a stop on this trade, let's say I pulled a short here. I thought this was going to be a great trade, and I pulled a short, but the market spiked through, right, and stopped me out. Let's say I'm trading 10 lots. I got stopped out on a 10 lot position. But if it moves 30 pips and I take off a quarter of it or half of it, and then it moves 70 pips and I take off the rest of it, that's all right, right? But if I take 35 pips, stop to break even, and it hits, you took a 35 pip gain, right? But if that stops out, you would have gotten stopped out on the entire allotted amount. So you want to make sure you're keeping that in mind. If I have a 20 pip stop and I'm looking for 20 pips and I take a 20 pip loss on the whole allotted amount, and then next trade I take half the trade at 10 pips or the allotted amount, then the market moves back at break even, you have a lopsided risk to reward there, right? Because you took a stop on the full amount. Right, 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 Eileen. So she says only break even. At least definitely have to have something on the table before I jump into a break even trade. All right. Any other questions? Feel free to throw them out. Again, we're pretty quiet on data this week, guys. I really wish there was more for us to kind of mess with here as we get deeper into the week. But everyone's going to be looking for those retail sales figures on Friday from the United States. Again, keep in mind that the health of the consumer, i.e. what the Fed is looking for to really move on rates, is sort of the main focus. So if you get a weaker print on that, and we'll go over that right before the read tomorrow, but if you get a weaker print on that, um, it could shake things up even more, even though it seems like people are discounting the next interest rate cut already, kicking that out way further than was anticipated earlier this year. All right, so if there are other questions, guys, we'll go ahead and wrap it up here. I want to thank everyone for attending. I will see you tomorrow morning, 8:30 Eastern, once again. Hopefully we'll get a little bit more action on some of these moves. Be careful with the euro, okay? I like the breakout, but specifically on the euro dollar where it is right now, if you're trading something like Euro Oz, yeah, you're at resistance near term, right? Counter trend might work as you head into US trade session. But looking at the euro dollar, if it's going to come up, just want to note the critical pivot today is whether we close above or below that 1250, 1260 region. This is the only thing I'm looking at for the euro dollar tape, whether we close above or below that region. All right. See you guys tomorrow. Best of luck trading. Cheers.